Hello everyone, my name is Paul Baldovan and I'm a tax associate at Kaufman Rawson, and today I'm going to be talking about taxation in the Empire State and the Keystone State. Now first, I'm going to give an overview of the tax systems in New York and Pennsylvania. Second, I'm going to go into more detail about their income tax structures, New York with their franchise and progressive income taxes, and Pennsylvania with their flat income taxes. And third, I'm going to talk about something that I thought was very interesting, and that's how states use tax incentives in order to generate economic opportunities. And last, I'm going to ask some questions. So first, let's talk about New York's tax system. So state law permits the levy of income, property, franchise, sales and use, gross receipts, and miscellaneous taxes. And some of those miscellaneous taxes are on items such as alcoholic beverages, fuel, cigarette and tobacco products, realty transfers, and stock transfers. So this is a very common way that states generate revenue, and it's not unique to New York. You'll see this across multiple states. So if we move on to Pennsylvania, their principal sources of revenue are sales and use taxes, corporate and personal income taxes, and a lot of the miscellaneous taxes that you saw in New York on items such as alcoholic beverages, fuel, cigarettes, and tobacco products. So you'll see it's a very common way that states raise revenue, and so that's some of the ways that New York and Pennsylvania are similar. So now let's talk about some of the ways that they're different. So New York has a franchise tax on corporations, and that tax is based on three bases: business income, capital, and fixed minimum on gross receipts. And so as you can see, the fixed minimum ranges from 25 to 200,000. So in effect, the minimum tax a corporation will be assessed in the state of New York is $25. And I saw this actually about a week and a half ago when I was preparing an extension for one of our clients at Kaufman Rawson. And this particular client actually had a net loss. But because they had capital within the state of New York, they were subject to that capital tax, and they actually had a tax liability in New York despite having a loss for federal income tax purposes. So it's something that you have to keep in mind when you're advising your clients is, are they located in a state with a minimum tax? And there are a few of them. Now for individuals, it's a progressive tax system. Rates range from 4% up to 8.82%. Now I was fortunate last year when I filed my New York State return, I was in the 5.25 bracket. But if you're in the top 1%, which I certainly am not, you will be subject to that top rate of 8.82%. Now Pennsylvania, they have a flat rate on corporations of 9.99% of net income. Now that's federal net income with some additions and subtractions, and that's one of the highest corporate tax rates in the country, so I wanted to point that out. Now for individuals, it's a 3.07% flat rate on all of your income. Now, one of our classmates pointed this out already, but I just wanted to mention it again because it's very important. There's no standard deduction. So although you're paying a lower rate than in a state like New York, you don't have the ability to reduce your taxable income in Pennsylvania, whereas in New York, you can take advantage of a standard deduction, and so you're reducing that taxable income. So that's something that you have to keep in mind. Now, next I wanted to talk about something that I thought was very interesting, and I used to see these commercials when I lived in New York, and I've even seen them on the television since I've been back in Florida, and that's for programs such as Startup New York. And this is a program that allows businesses to relocate or expand within the state and partner with a college or university and operate tax-free for up to 10 years. So that can be a tremendous tax savings. The company must be in certain manufacturing or technology industries, but this is one of the ways that states are trying to create jobs and expand opportunities for the citizens within their states. And it's debatable on whether or not it works. There was actually an article about Startup New York in January where there were people that were criticizing the program, so they're looking to change it and make it better. But this is one of the ways that states try to grow economic opportunities. And Pennsylvania does something very similar with their Keystone Opportunity Zones. And this allows businesses to acquire state and local tax credits if they own or lease property within a specific economic zone and conduct a business activity. If they're relocating to the state, they must increase their full-time employment or and make a capital investment. So this is a way that states are trying to develop underdeveloped and underutilized areas within the state and grow the economy and encourage investment within their state. So I thought that that was very interesting how that pertains to a state and local tax class, because these are specific state and local tax credits that you can advise your clients on if they are considering a move to New York or Pennsylvania. Now that leads me to some questions. So we talked about the tax systems of New York and Pennsylvania. So what are some similarities between New York and Pennsylvania's tax system? We talked about a few of them in this presentation. What are some more that you can think of? And secondly, we talked about some of the different programs that states offer, like Startup New York and Pennsylvania's Keystone Opportunity Zones. How many states offer similar tax incentives for job creation and economic development? Are there any others, or is this an experiment that's unique to New York and Pennsylvania? So I hope after watching my presentation you have a better understanding of the tax systems of New York and Pennsylvania, more specifically their income tax structures. And I also hope you have a better understanding of how states use tax incentives in order to expand businesses within their state. And I hope you enjoyed the presentation. Thank you for watching.